Hey guys, if you found this on YouTube, you know we're trying something a little bit different. Since we can't come to you and sit down and explain these changes with HIP, we thought we would just put out a video. I'm only going to go over what's in the packet that you received, and so if you're watching this, you've already figured out how to find us on YouTube. So a couple things you need to know about HIP. We've got an April 30th deadline, so RMA has relaxed some of the qualifications for you to have to sign this policy, so you can call us, we can talk about it. Amanda and Lacey can go ahead and opt you in for it, and we can get a signature later just to save time. When we talked about HIP at the meetings that we had earlier in the year, we had some uncertainty. We couldn't quote it, we couldn't tell you how the policy was going to work, so we were very apprehensive about it. Amanda and I spent a lot of time in the last 2 weeks figuring out the intricacies of this policy. So what I'm going to do is I'm going to go over the example that you'll find in the packet that we sent you. So let's pretend that we have a cotton farm that has 1,000-pound average yield on it. So your history is 1,000 pounds on that cotton farm. You took 70% crop insurance level back in February, and now we want to add the HIP policy on top of that, okay? So you take the 1,000-pound average yield times 95% level HIP coverage, okay? So that would give us 950 pounds of coverage under HIP. You take 1,000-pound APH times 70% level regular insurance gives us 700 pounds. The HIP policy actually exists between those two numbers. So between 750 and 950, that's 250 pounds of HIP coverage available on this policy. It's at 70 cents, just like your regular crop insurance is. So you'd have 250 pounds of coverage at $175 an acre. Now that sounds great. The problem is if you take 100% of the HIP coverage that's available, you're looking at about $12 to $15 an acre premium. We know we can't stand that with 50-cent cotton. So is HIP a good thing? Yes. Can we justify HIP at 100% rate? No, I don't think so. So if you look on our HIP example, it's on the back page of the that we sent you on our personal example here. HIP at 100% rate gives you $175 in this example, $13 premium. You can elect any level of HIP you want, okay? So 100's too much. I still feel like 50's probably too much. Between 33% of the HIP coverage and 20% of the HIP coverage, I feel like that's probably a good place to be. In this example, 33% of the HIP coverage gives you $57 worth of coverage, $4.30 an acre premium. It's fall bill premium, just like your regular insurance. 25% of the HIP would give you $43 worth of coverage, $3.25 an acre premium. I think that's where we probably should be. Everybody's operation is a little bit different. So if a farmer has 60% level and he takes on regular insurance and takes 95% HIP, he has more pounds of coverage in that span. The example we used was 70% coverage. So if a farmer's got 60% instead of 70% on his regular insurance, his premium may be a touch higher on HIP, but not a much. So most of you guys, I think, will be fine from 33% to 20%. Call me, we'll talk about it. You know, I can't come sit down with you and go over it. Amanda knows the ins and outs of it. I do as well. Our phone numbers are there, our emails are there. We've got to get this done by April 30th. So I'm going to answer a few questions that I've been getting on HIP. What if I've already harvested my crop? And that's a great question. So let's say that you harvest your cotton crop and you're done by November 15th, November 30th. Major hurricane Cat 1 comes into your county or the adjoining county. Hey, guess what? It didn't affect your cotton crop, but you're still going to get 100% of the payment. We feel like HIP is going to be the new replacement for disaster money coming through your farm office or USDA. So it doesn't matter if your crop's already harvested. Don't matter if yours was early cotton and it really wasn't affected by the storm. If the storm hits in your county or the adjoining county, you get the payment no matter how it affects you. Does it affect your regular insurance? No, it does not affect you don't have to have a regular claim to get it. Does it replace your hail and wind coverage? No. If you have regular hail and wind coverage, it still works exactly like it has been. There's no change there. You've already opted in for that. It's already handled. But you're just putting this HIP endorsement on top of your regular insurance. So I think we can justify $2 or $3 an acre, but I don't think we can justify 12 or 15. So that's why I think that we need to be in that 20 to 33% range. Does the hurricane have to go through my county? No, but it has to go through your county or the county adjoining you. It does have to be a Cat 1 storm. So tropical depression hits, even though it has a name, that's not covered. All that's covered is damage due to a Cat 1 or higher hurricane. How long does the coverage last? Until the end of the insurance period for that crop. Okay, so that would be November 30th for peanuts, December 10th for corn, soybeans, grain sorghum, December 31st for cotton. So the question I get is, why in the world would I want to put this on my peanuts? Because the hurricane's not going to affect my peanuts. Remember, it has nothing to do with how the hurricane affects you. It has nothing to do with if you had a peanut claim or not. But it works exactly the same way with cotton, corn, beans, whatever the case may be. If the hurricane comes through your county or adjoining county, you automatically get the payment if you've opted in for it. So it's just as valuable on peanuts as, let's say, it is on cotton or corn or some other crop that may blow down. What crops can I insure? All of your spring crops. Peanuts, cotton, soybeans, grain sorghum, corn. I may have said corn already. All of them. Do you have to put it on every crop? No, you don't have to. You can just put it on cotton. You can just put it on peanuts. Those are your main dollar crops, but you could put it on all of them if you wanted to. Can you take a different level of HIP on different crops? Yeah, you could take 33% on cotton, 25% on peanuts. Actually, in my mind, you guys know we like to keep it simple. I probably would just keep the same amount across the board. I feel like this is going to be the new, and I can't point to this in federal procedure, but I really feel like HIP with the wind index added is going to be the new replacement for hurricane assistance coming through USDA. So we're going to be in touch, but with crazy hours, social distancing, kids at home, doing homework, all the stuff that we're working on, APH, fixing to get into acreage reports, already having some claims on corn. Our time is limited, your time is limited, so hey, I'm glad you're watching this video. I hope this helps. You need to call me, I need to call you. We need to get you signed up if it's something that you want to do. Look, if you like doing it this way, seeing these videos, let us know. Give us a little bit of feedback. I know sometimes it's hard to get to the meetings, but there's stuff that you need to know. So we're thinking maybe if this works out well, that we'll do this more often. And guys, we really appreciate you. Hope that you're staying safe with this coronavirus. There's so many unexpected things. We're all doing well, but we're working a limited schedule just because it's hard for us to get information from some of the people that we need, from GINs, from USDA. It just makes it difficult. So we're working a reduced schedule, but you've got our cell numbers day or night. You know how to get up with us. That's what we're here for. So I'm not sure how you sign off, but that's all we've got for today. So we're signing off. Thanks a lot.